It's time to get more insight behind some of the world's leading banks' currency projections with another Targets in Focus. I'm joined again today by the Deputy Global Head of FX Strategy for Crédit Agricole CIB, Daragh Maher. A lot has happened in the currency market since you last spoke to us here at Dukascopy TV, Daragh, the most significant arguably being the action of the SNB last week. Last month when we talked, we discussed the reality that much of what was driving the Swiss currency wasn't local factors. Have the SNB managed to turn that around? And where do you see the dollar Swissy heading at the end of this year and going forward?
I don't think necessarily the SNB by their actions have changed kind of the domestic versus international dynamic for the Swiss franc. It's still very much a currency that is more tuned to what's happening outside of Switzerland than what's happening within it. I think what the SNB action has done is to try and provide some insulation from that effect, and so far it appears to be successful. And Euro Swiss holding at 120, and I think there was some credibility gains because one, there was political support for the idea, and secondly, the language they used when announcing this floor on Euro Swiss had the kind of, if you like, powerful impact that you would hope for. I think it's also been significant that we've been able to hold reasonably strong or hold the level despite further wobbles in the euro. So it's got a chance of success. It's not guaranteed. I think they'll face sterner tests than we've seen over the last week or so. But by extension, it means if you're taking a view on dollar Swiss, really it's going to be conditioned largely on your view on euro dollar, and I'm still a bear there. So I think I think ultimately dollar Swiss short term will stay stable, but I think thereafter will begin to rise, and I also expect the Swiss franc to weaken further out on the forecast horizon.
When we last spoke about the dollar yen, you mentioned that as we were likely to see US 2-year yields rise more quickly than Japan's yields, that could push the pair higher in the long term. Do you still think that is likely, or could we see more risk in the instrument with the threat of further intervention in the yen?
I think it's still likely. I think, though, what we've seen over the last month will have forced many to have revised when that process might begin. Our forecast 12 months out certainly envisage that US yields will be rising more swiftly than Japan's, but I don't think it's something that's imminent, and the more imminent factor is going to be that is in the opposite direction, whether this kind of nervousness we're seeing in markets now is sufficient to generate yen strength that the Ministry of Finance feels it needs to react to by intervening. That's definitely the mood of the moment, and likely will be for at least a month or two. But 6 months down the road, 12 months almost certainly, I think we'll be in a normalization process that would see US yields rise more swiftly and lead to yen weakness.
Finally, arguments continue in the UK and Europe about austerity, debt and how to get a recovery going. What impact is all that having on their currencies, and where do you see the euro sterling heading in the short, mid and long term?
I mean, there is a debate. I suspect that the UK policymakers would argue that their stance has largely been vindicated. They've obviously were early on the fiscal austerity. They've set up a medium-term, reasonably credible plan, and they've not been punished unduly by the bond markets as a consequence. Obviously the UK economy is struggling, but many global economies are struggling, but at least UK policy has that credibility backdrop. But yes, it's a debate for the Eurozone in terms of what the correct positioning of fiscal policy should be, but it's not really playing, I don't think, in a material way in euro sterling. Euro sterling much more driven simply as the middleman between euro and the US dollar. Sterling, I don't think, really carving its own niche. It's definitely in the middle of those. So if euro dollar is falling, typically euro sterling is falling, but at a less rapid rate, and I think that kind of relationship will persist and be the main driver.
Thank you very much as always, Daragh. There will be more news and interviews exclusive to Dukascopy TV this week, including another Targets in Focus from Citi in New York, so stay tuned. Goodbye.